Hey everyone, welcome back to the Your Money Life podcast. We're at episode 331 of the pod. So make sure wherever you're listening, you like, subscribe, five-star rate, and review this podcast. We do this every week. We're going to get into it. It's a busy week with some information, especially market information. Let's actually dive into the market first and foremost and show what has been happening when it comes to the last several trading days, especially the past week, which has been more volatile. And that correction that a lot of people have been calling for, it's still not there. We're not in correction territory, but we are in pullback territory. I would like to say the market is actually just taking a breather. The market has been on a heater for a good minute, and now we're taking a breather. So the past 5 days, five trading days, we're down over 3.5%. Past month, down 1.5%. But if you look at a 6 month basis, we're still up 5%, right? Still up 5% on the 6 month basis. Year to date, which is roughly that 6 month time frame, we're up nearly 6%, and on a year time frame, up 20. So this pullback, this correction speed, people overblow these things because again, if you've been investing for a long time, one, if you're not like non-emotional about a pullback, which is what most people should be, like if you've been investing for a long time, why would you care of a smaller correction? It didn't make you go negative, right? Like that's just it's hard to fathom people talking about it in a doomsday scenario when you haven't gone negative. And the next thing is you can actually look at it as opportunities. We've always said that. These dips, these corrections are opportunities. Opportunities, folks. You got to get used to understanding that these are opportunities. Right now, the futures are up, so looks like the market is trying to indicate that it will be a little bit of a bounce, but I don't know if that will hold throughout the trading day. I think there is going to be more correction, more of a breather for the market, but we'll see. Intel, AMD, these semiconductor chips are gaining in the pre-market. They were under pressure after many investors were saying, "Hey, we're being going on a heater." Like I was saying, the market has been going on a heater. Is there time where people are going to take chips off the table, going to sell a little bit? Will sellers ever come in? But we'll see again how much that holds. Oracle dropped more than 9%. They said that they have an additional 20 billion in equity and debt to pay for its AI build out. West Texas Intermediate crude futures came in overnight, and came off their overnight highs and shed 1%. Let's see. Anything else that was pretty interesting to look? It's just again more of the same where you're thinking about are investors going to take a breather or are they not? But again, if we go back to this chart, we are still positive territory, even from the beginning of the year. People, if you hear people, they would say we weren't. But again, people just get really emotional about this. Even when we were going through the huge heater, the market was on a strong run. You're seeing people. I know it's the corrections due when there's people saying, "Oh, I'm doing well investing or trading on their own," when it's just the market going crazy, but they think it's just them. And or people are screenshotting, different 401k bonds, any of those sort of things. You just know we're due for a correction because people have gotten overrun. The over exuberance means that the doom and the punch in the face is coming. But again, is it even? Did we slip the jab? Because again, it's not crazy. I do think we still have potentially more to go, but it will eventually clear out. And that's just how these things go. So again, keep an understanding of that, ladies and gentlemen. And again, make sure you understand taking advantage of your opportunities. Speaking of opportunities, we're going to go into sports to start. The Knicks, they just pulled off the greatest comeback in NBA Finals history. I watched the first half of the game. My wife was just making fun of me because I turned it off and said, let's just like watch the episode of Love Island because this is over. The Knicks were like shooting or the Spurs were shooting like 70% for the 3 point line in the first half, 60 to 7%, something of that nature. It was close to there. And they were just blowing them out. But I should have known that you don't count out a team in basketball because it's a game of runs. And they're calling it the Miracle and MSG. And in the pantheon of NBA Finals comebacks, it's the greatest comeback. The Knicks overcame a 29-point deficit to defeat the Spurs 107-106, and they have a commanding 3-1 lead of the series. If you remember correctly, I had the Spurs to begin the series in six. And it looks like I don't even think that's possible now. It has to go 7 games. Yes, it does have to go seven if the Spurs were to win. But that ain't gonna happen. I think the Knicks win this now. Well, actually, I'm not switching. I'm still sticking with my Spurs because that's where my bet is. But I mean, it looks like overwhelming odds the Knicks should win this. So we'll see. Next game is Saturday night. A lot of sports on this weekend. A lot of good things going. But what a crazy game! Don't ever turn off the game for Love Island. That's a lesson to self and to me primarily. Really. Ugh. Yeah. Well, we'll keep watching that. On other news, roughly half of Americans are worrying that AI will take their jobs. So this is rapid adoption of AI, in which you can't even ignore it. Companies, build outs, investing money, capital. You got SpaceX, Anthropic, and OpenAI coming to the market, but there's a rapid adoption of AI technology across corporate America. And it has workers worried about job security because more than half of respondents in a new survey expressed concern that AI could put them or someone in their household out of work. That's about 37%. They said they about 37% said they weren't worried about it, and 10% said they were either unsure or unwilling to answer. So interesting. Yeah, I've seen this. I've heard this from people. And again, there's a lot of things that can displace people, right? And working, it's not just AI, but AI is the main thing right now. The point of that is to really have control in an agency. I felt like when I worked W2, I didn't have control in agency, and now I have more control in agency than ever. And you want to be able to have, if you're someone that needs that, I do. I'm not someone that can really listen to or take advice from others. If you don't have control in agency, then you are at the whims of what a company or what someone else decides to do. In the next decade, working for yourself is going to become much, much, much more prevalent, much more needed for multiple reasons, not only to for job security, but to beat inflation. Businesses grow, successful businesses are much better than a W-2 career. That's just a fact. If you're an owner of a successful business, you are doing better than someone that's in a W-2 career. That's just a fact. Now, of course, there's exceptions to everything, but I don't know if you guys saw that the minted multimillionaires we talked about last time via the SpaceX IPO. They said there were even cafeteria lunch ladies that are going to be millionaires from the SpaceX IPO. So I'm sure they're quitting their job. So let's look at some more news. We did get the CPI inflation report, and it wasn't great. Inflation accelerated in May because of rising energy costs that contributed to the pain for consumers. But not only energy costs, there was more higher food and services costs as well. If I'm not mistaken, a broad gauge of goods and services across the US economy rose at a seasonally adjusted 0.5% for the month, putting the annual inflation rate at 4.2. That's not good. The Bureau of Labor Statistics reported on Wednesday. Both numbers were in line with consensus, and inflation climbed above 4% for the first time in 3 years. Though the increase met expectations amid concerns of how much the surge in energy prices would impact the economy. So let's take a look at this inflation chart, the CPI consumer year over year percent change chart from 2021. We were living in good times, man. Remember when inflation in 2021 was 1.4%? We had that mixed with strong markets in 2022. Oh, wow. But then we started to climb in 2021. So I guess I should say 2020. We started to climb in 2021, started to move up 2022. Whew, d- very dangerous days. 2022, we're sitting at 9% at the peak. And then we made moves to increase the Fed rate, the Fed funds rate. The Federal Reserve increased rates to slow down the economy, which of course will have a lot of ramifications, stock market ramifications, all these different things. And that started to pull us down. And then as you get to 2023, we actually hit a low, almost a low there of 3.1%. Bounced around, but trended lower for the next several years. But now in 2026, we're going back up. That's not a good sign. The Fed is supposed to be lowering rates, but if our inflation metrics and CPI is still hot, then they can't lower rates. They'll have to potentially increase rates. But I don't think they'll increase rates. They have a new Fed chair coming in. It's not going to want to rock the boat. They'll keep those rates steady and or when they have the opportunity, lower them. But it's not good to see inflation increasing. But if you strip out food and energy prices, the so-called core CPI only accelerated 0.2% for the month and was at 2.9% from a year ago. So the core CPI is still getting closer to that 2.9. It's still trending up, but You can see that it's a little bit more tame, but people are getting squeezed financially by inflation. That's back at a 3-year high. This is from Heather Long. She's an economist at Navy Federal Credit Union. And she said the frustration for Americans is that many of the basics are up in price right now. That's gas, food, electric, and medical care. All clear pain points that are above 3% inflation. Ending the war in Iran will help to moderate inflation, but the worst is likely to still come for rising food prices. That's from Heather Long of Navy Federal Credit. This report did arrive at a sensitive time. The markets, as you see yesterday, did not take kindly to this report. So we're just seeing that, like, you know, inflation is still a thing we've been talking about for many years. If you've been listeners for a while, you've been hearing and talking about this. And this chart is not a good sign for just general economy, again, for prices, right? I was talking to prospective clients this week, and they were talking about the cost to do anything is so elevated. I was talking to someone that was owning a store or wanted to get a retail front space, and before the rents in this particular geographical area were 1,000, and now it was 4,000 for them to start a retail space in this. It was out of the country actually. If it was in the country, it'd be a lot more anyways. Another person just talking about how the cost of everything is more expensive. It just almost the person that she lost hope about what she should do in the sense of, is saving even matter? Of course, we combat that by saying the only way to beat these things is to invest, save, increase income, start a business. But yeah, it can be dire in some cases. Can be dire in some cases. So that's something to watch, folks. Is the inflation print. World Cup. I don't know if you guys are watching it. The World Cup is starting. I'm a fake soccer fan, just meaning casual. But the World Cup does kick off, and there's going to be recognizable stars. There are going to be games in U.S., Mexico, Canada. I believe here in New Jersey, there actually will be some, and I probably won't be heading to them, but I might watch the big one on the TV screen, more than likely. But it's always a great event every 4 years, so keep an eye on that. What else? There wasn't anything else too crazy, folks. Let's get into some questions. Let's see if there's anything good that we want to discuss question wise, because I do think we had some good ones. The first one being starting July 1st, which is in a couple weeks, how many repayments will new federal student loan borrowers be able to choose from? No clue. I'm going to guess two, one, two. The answer, two. Standard repayment plan or repayment assistant plan. That's RAP. What you need to know about these before you choose the best one is something to know. But I guess the repayment assistance plan or RAP is the U.S. Department of Education's latest income-driven repayment plan or IDR, meaning it sets borrowers' monthly bills at a share of their income. The other new option is the tiered standard plan, which includes fixed payments spread over several different timelines based on a borrower's total debt. So only two options. Does that simplify? Does that make it worse? We don't know, but we'll dig into that. That's only two options coming July 1st. So that's good to know. Question of the day number two, question of the week, I should say. When was the last time the US federal minimum wage was raised? It's been a while for federal. I think some states have obviously raised in the last 10 years or so, but federally, what is it, this minimum wage federally? I actually don't even know. But I would say it's at least been 30 years, at least. Oh, July 2009. So I was close, but no cigar. July 2009. The federal minimum wage is $7.25. And that does not have the same purchasing power that it does in 2009. Obviously, we've just talked about inflation. Don't even want to get into the luxury inflation amounts. But inflation, again, hitting hard. But this federal minimum wage is still at $7.25, not changed since 2009. This is provisions that were contained in the Fair Labor Standards Act, and it was effective on that date. Many states have minimum wage laws. Some states' laws provide greater employee protections and that employers must comply with both. So, just in case, make sure you know your state's laws and not just the federal, because the state does have some power in that regard. But yeah, $7.25 with inflation that we're talking about, that doesn't seem fair. Hopefully, they make some changes. Speaking of changes, folks, make sure that you like, subscribe, 5-star rate, review, and comment on the Your Money Life podcast because we do this every week and we will, of course, be back